Hi, I am Anna. I come from www.ntvforex.com. Deteriorating US China relations is not yet reflected in markets. http ntvforex.com News ID 0fa65e 7/23/2020 7:40:28 am. Tensions between the world's two largest economies are on the rise. After ordering the shutdown of China's consulate in Houston and claiming two Chinese hackers targeted U.S. companies working on the virus and stealing information, we are yet to see the Chinese response. U.S.-China relations have already been worsening since the beginning of the year on several fronts, including the handling of the coronavirus, cutting Hawaii's operation in the U.S. and abroad, revoking Hong Kong's special status after China imposed a new national security law on the city, and several other issues. However, the closure of a consulate is unprecedented and could take the Cold War onto a new level. The market reaction to the latest developments has been muted. U.S. stocks managed to end Wednesday's session near their multi-month highs, the dollar continued its downward trajectory against its major peers, and the damage was limited to Chinese equities and the yuan to some extent, which is trading back above 7 against the dollar. Hopes for another round of U.S. stimulus and better-than-expected earnings from the big tech firms is keeping the rally alive despite valuations becoming extremely overstretched. But if worsening U.S.-China trade relations lead to reimposing trade tariffs, then it's likely to mark the short-term top in equities. Better-than-anticipated earnings from the likes of Tesla and Microsoft are not the true reason why stocks are at current levels. It is because monetary and fiscal intervention have left few options for investors to park their money. Consider that high investment-grade bond yields dipped below 2% for the first time ever yesterday, and that U.S. 10-year Treasuries are yielding 0.6%, which, when subtracting inflation, will leave investors with a negative return of 0.9%. That is a huge disruption to how markets function in normal times. But policymakers on the fiscal and monetary side are obliged to take these steps to prevent the economy from collapsing, even though they know their measures are creating bubbles in several asset classes. Gold continues to be a safer bet than chasing overvalued stocks. With yields expected to remain low for a long time, inflation projections likely to head higher in the months to come, and geopolitical tensions on the rise, some great ingredients are present for the precious metal to continue attracting inflows. Only $50 away from the all-time high, it is only a matter of short time for the yellow metal to see a new record. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.